Hi everyone, welcome to my YouTube channel. My name is Mike. Welcome to Kingsway Trading City. So in here, I hope to just give value to every aspiring forex trader. You're out there struggling. Let's grow this YouTube channel together because I'm going to be putting up valuable content for free. You will not pay anything. I will not ask for you to pay anything because I struggled through my way up. So I want to give value to every trader out there. You are struggling, whatever you are struggling with, I hope I can help with that. So with that being said, please subscribe. Don't just watch, subscribe. Let's grow this YouTube channel so that it can reach as many traders as possible. So today my interest is to talk about market sentiment, but in a view of market directions. So every time you open your chart, you are going to find only through three possible directions on the market. So you are either going to find the market is going moving to the upside or going to the downside or sideways like that. Okay, so these are the only three price movements that you're ever going to find on any asset at any given time. When you open your chart, either the market is going upwards, going downwards, or going sideways. There is no other movements aside these three movements on your chart on any asset, any trading session. So as a trader is to know how you define this move, this move, and this move. So when you know how to define these moves, because your profit making is not in just seeing the market moved upward or the market moved downward or the market moved sideways. So your profit is in anticipating this move to the upside and then profiting from it as it goes upside. Same with the move downside or the move sideways. So what we mean by the upward market is when you say upward like this, we are saying the market is trending to the upside. When you say downside, saying the market is trending to the downside. Sideways, the market is ranging or consolidating. These are the only movements that you are ever going to find on any chart. Either the market is trending to the upside, trending to the downside, or just ranging or consolidating. So you can benefit from all three movements. So you can benefit from an upward move, you can benefit from a downward move, you can benefit from a ranging move. So as a trader, it's key to understand that the best or biggest moves are ever going to cut are going to be in a trending market, not in a ranging market. Because in a ranging market, or even today I'm not talking about ranging market, but just to give you a concept of what I mean is a ranging market, you trade within the range. So you get something like this, you trade within the range. You don't enter a sell here and then anticipate a breakout. It is very, very dangerous because the market is not your toy. You don't control it. So it can break out, or it can just give a fake breakout by going back inside the range and then continue to the upside. So you don't want to sell in anticipating that's going to break out. There's an advanced way of doing those things, but not in this series. So you want to respect the range. So if you sell here, you take out your profit here. If you buy here, you take your profit here. Okay, you respect the range. Sometimes the range is too small, you can trade it. Sometimes the range is big enough. This is something that I like. If the range is big, there are good trades there also. But in a ranging market, this is where you anticipate to get a massive amount of pips or a massive amount of profit, because the market shows you an overall direction to the downside, and then not only that, the market shows you the strength. Okay, this strength in a downtrend anticipates gives you more chances of believing that the lows are going to be taken out and the highs are going to be respected. Very key. So when you sell here, your trade has more probabilities of it to break this low and continue to the downside. So you are going to catch more pips in a trending market. The same for the opposite upside market. So as a trader, how you define the trending market. I'm going to talk about the ranging market in the next video. But today, how do you define a trending market? How do you know that a trend is activated? Because that is very important. So in most cases, you find the market comes from the range. Okay. So when you see the market breaks to the upside, you wait for a retracement, okay, or a correction move. Then you see another impulsive move to the upside. So your when the move is going to the upside, you watch what the market is doing to the high. Okay. So in this range, there's a high that is taken out there that was set within the range. You get a retracement. This low that sponsored this push to the upside. Okay. This low here sponsored this push to the upside, takes out this high. You get a retracement inside, but this low is kept intact. Okay. Then you get another push to the upside. This high is taken out. Then you see another retracement here. This is not your area of focus. This is not how I do it personally. So I wouldn't advise anyone to do it like that if you're going to follow what I'm saying. So when you have a push to the upside, this is not your focus. Your focus is how the market keeps these lows. Okay? Because in an uptrend, the market is going to make a series of higher highs. Okay? A series of higher highs and higher lows. So as you see market respecting the lows, taking out the highs. It's too dirty now. So you make the market doing something like that. It's still not a confirmed uptrend until you see this retracement. Whether it breaks this high or not, it's not your concern. Your concern is, are these lows being respected? Okay. So when it comes down here, then it shows a very clear interest of going higher and takes out this high as well. So as long as these laws are respected, it is now a confirmed uptrend. Okay. Let me show that again. When the market breaks higher and then it's retracing back in, do not focus on here. Focus on here. Okay. Because price can break this high and still go higher as long as this is kept intact. Very important. Okay. So this is how you define a trending market, an uptrend. A trending market to the downside. When the market is pushing downside, don't focus on these highs, focus on these lows. Okay. As long as these laws are respected, the trend is activated. These highs are being broken or taken out, we are in a downtrend. Okay. A ranging market does not take out these laws set and respect these lower highs. Okay. So I want to repeat this one. Very key. So in an uptrend, so anything I'm saying, whatever I talk about, I'm mentioning an uptrend is still the same that applies to the downside. So when it's coming down here, don't focus here, focus on here. As long as these laws are being respected. So in an uptrend, the highs are presumed weak. Okay. The laws are what keeps the movement or the momentum. So as long as the laws are being respected, you are still in an uptrend. Okay, so coming out of the range, breaks out, there's this high here taken out by this low here. You get a retracement, whether it bounces off this high or not, as long as this low is being respected, you get a push that breaks this. Now we can anticipate an activated uptrend. Okay, when it comes back, this is not our area of focus. Our area of focus is the previous low. Is it being respected or not? When it respects, by what I mean is, if it does not take out this low, then rejects and push higher, it's a confirmed uptrend. So in this video, I'm not teaching you how to trade yet. I'm just showing you how to identify or anticipate these moves before you get a trending market. There is where everything starts from. Very important. So the same applies for the downtrend. Okay, coming out of the range, you see a push to downside. This row is respected, traces back. This row, these lows are being respected, but the highs are being taken out. So you see 1, 2, 3. Now you are watching. This high is taken out. You have two lows now. This move downside here, is it respecting this low? Forget about this high, because it can cut in. Sometimes it may bounce from here. It's okay, but your area of focus is this one. If it bounces from here, it's still okay. Goes higher. As long as these lows are not violated, you are in a confirmed uptrend. Okay, and then how you trade them is a video for the next upload. So this is how you do it. Now let's see if I can go to the charts. Let's see if I can go to charts. Charts. Okay, let's go to gold. This is gold. Okay, so what can I use here? Okay, let's see if I can use okay, so see, we're coming out of this range here. Okay, we have a push to the upside. We get this retracement. This law is not violated. It's okay. Sometimes you don't get a deep retracement. That's okay. So you see another push to the upside, takes out this high. Okay, let's do this. So we take out this high. We take out this high here. This thing. I don't know why this thing is making it hard to move it. Okay, we take out this high. And then again, we come here. We take out this high. When we take out this high, we get this retracement here. But this retracement does not violate this law. Okay? Because this law is still kept intact and this law intact. When you get a rejection here and this move breaks this high, this one, as soon as we break this high, we know that we are making consistent higher lows and higher highs. So we are in a confirmed uptrend. This is an uptrend. We are not violating the laws. We are just violating the highs. It shows the market interest to continue going higher. Okay, so as soon as we take out this high, we get this retracement deep down here. See, this is what I'm saying. When it's going higher, breaks this high. This is not your area of focus to wait for uh, a continuation rejection. No, because it can cut deep inside here. You see this first rejection here, it bounced off this high, but it didn't go anywhere. Okay, cuts deep inside. This move, this rejection breaks this high. These laws are still respected. This law is still being respected. This law that sponsored this move, that broke this high, is still respected. Okay, so we get this impulsive move to the upside. We break this high. So let's go again here. So now, here, we break this high. We come back, we retrace back. We cut deep inside. We take out this high. That's why I'm saying this is not your area of focus. Focus on the laws. If you're dealing with the uptrend, focus on the laws. Are the laws being respected? So you see this retracement bounces off here on this area. So these laws are still being respected. Then it continues to go higher. Let's see if I can spot a downtrend. So I'm hoping to find something clean, because some things are not clean always. Okay. So you see here, after breaking this high, bounces up there nicely. So at the time of recording, this is 26 August. So we take out this high. Now we have this low to watch. Okay. So we get a retracement, which just bounces off this high, continues higher. We take out this high. Then we have this retracement back inside. We respect these laws. We don't violate the laws. So we are in a continuous uptrend. Okay. Let's see if I can don't mind the date there. We're having a class also. So okay. We are anticipating this move here to the upside. Imagine all this move on God. We got it. How? Coming out of this range. We see market coming strongly with this impulsive move to the upside. We take out this high. This high is violated. Now we start watching for what price is going to do next. Then it starts to retrace from here, cuts down inside. We take out this high. Remember, I'm saying in an uptrend, don't focus on the highs, focus on the lows, because the highs are presumed weak. When the market shows you an overall interest of it to push higher, concentrate on the holds, because it's going to be respecting the lows while violating the highs. That's the whole essence of a trending market to the upside. So we see this push here. We take out this high, then we get this deep retracement inside the range. But you see, market does not violate this law. This is the law that sponsored this move that takes out this high. So it comes back in, but respects this area. So it pushes again to the upside and then breaks the previous high. So the moment you see this push to the upside, taking out this high, now you know we are in an uptrend. So you wait for this retracement, and I'm going to show you how you trade them so that you catch all these moves. So what I'm showing you here is anticipating this move before it happens. Then you see that market are continuously now, consistently now takes out this high here, goes up, comes down, bounces here, does not take out this low. It still maintains this low. So now we have this low, but we are violating this high. Then this bounce pushes to the upside, violates also this high. So we go higher. Okay, let's see. So this move that breaks this high, retraces from here down here, bounces from here, still respects these laws. It does not touch the laws. It is not violating the laws, but just violating the highs. Okay, so we have a new high here. Come on, I want to pick something else. Hey man. Okay, so we have this new high. We have this break. It's a very minimal move, but we get this push to the upside. Then you see price continuously doing the same. Okay, here we have this new high, breaks higher, comes here, doesn't touch it, comes there, touches it, goes still continuously to the upside. So let's see if I can find something again. Okay, this is for a downtrend. You see, coming out of this range, we see this side being taken out. Okay, we have a break now. You don't anticipate a break until price shows you these massive candles. Okay, when you see a break with weak candles, overlook it. So when we take out this high that was set in the range, we go to this new high set here by this impulsive move. So this retracement back inside, it's not violating this low that sponsored this move to the upside. Very important. So I'm going to call them bad timing. So when you see price rejecting here, comes back, closes above this high, breaks or violates this high, you see the retracements are not violating the laws. The laws are still being kept intact. We are in a trending market until the laws now begins to be violated. You see this law? It's being violated by this break inside. This law here. Okay. So today I'm not teaching you how you trade these trending markets. I want you to see how you identify these moves. Okay. Because major moves you are going to get are coming from trending markets. Look at this move here. Do you know where it started from? From this range here. We push to the upside. We retrace here. We don't violate this law. But this push to the upside violates this high. We get a deep retracement. This law is still being kept intact. Okay? You see all these massive rejections here. The laws are still being respected, but the highs are being easily violated. We are in an uptrend. Okay? So as a trader, look at this range. The amount of pips that you have in this range cannot be compared by the massive move to the upside. So the trending market will give you the best trading scenarios or trading setups you can ever get. So there are a lot I can show you. And you see we are in 4-hour time frame. These moves appear anywhere. Doesn't matter which time frame you're using. The 1 minute, the 5 minutes, 15 minutes, 30, 1 hour, 2 hours, daily, weekly. Trendings are always there. Not always there as in every day there, but when the market is trending, you see even lower time frames doing the same. So This is how I identify these moves. So here, this is a range. Okay, this is a range. There's nothing you are seeing here. Okay, so if I do this, as we see this break to the upside, comes back, then you see this is what I meant by saying a break with small candles like this. Don't consider them. You want to see this massiveness. This massiveness. Okay, when you see this breaking like this, then small candlesticks like that, probably a fake out. Probably a fake out. So I hope this helps you to identify trending markets, as I'm going to dive deep into them in this series and how you actually can trade them. So if this provide value, please subscribe to my channel, like the video, as it's going to make you to push the videos to others that may need this information as well. So until next time, please wait for the next upload.